Good evening, ladies and gentlemen. This is Ameen Hadeed presenting Startup Fundraising webinar. This is part of the series of Takween Accelerators sessions that we provided online. So Takween Accelerator is supported by YANHAD program, which is financed by the French Ministry of Foreign Affairs and the European Union, and implemented by Expertise of France as partnerships with the American University of Iraq in Suleimani. So this evening, we will talk about fundraising for startups. We will take notes, so grab a pen and paper. You can also watch this session recorded on our YouTube channel afterwards. So basically, we will talk about why every startup or new startup needs to raise funds. Then we will discuss funding at different stages, what are the requirements, and what kind of funding that you need to look for. We also will discuss about funding resources that is available now in Iraq and in the MENA region, plus the checklist of investment readiness for every startup at every stage. And finally, we will talk about the process of the fundraising, and let's take it apart and take notes about every stage of it so that you have full awareness about how to get fundraising done for your startups. So grab a cup of coffee and pay a lot of attention. We will start this session. So firstly, we need to discuss why every startup needs to raise funds in first place. So as you know, most of the startups, they think nowadays it's not possible for every startup to grow or to build their business without the capital. So the capital, one of the biggest, let's say, issues that's facing every entrepreneur. It's a headache for every entrepreneur when it comes to raising funds. So usually there are a lot of reasons that that money can solve. So these are some of them we need to share with you. So some of the stages you need to say that that's enough. I cannot do it only by myself. I need to hire more staff. I need to grow the team because this is it. Finally, I'm stressed out. I need to allocate a lot of budgets to hire more staff in order to organize my business. The other reason could be paying for more marketing. Now the business is, let's say, it's not getting a lot of attention, customers' attention, and you're not reaching enough clients. So now you need to spend more and also to press the pedal of the marketing and spend more on marketing. As well as paying back some early loans. So some of the businesses might raise different rounds of loans, or they took loans from their family or friends. So now it's time to pay it back. Also, you can think of moving into a bigger space, hiring, maybe you are renting a warehouse to your inventory, putting, let's say, a lot of logistics part into different logistics infrastructures. So these are the main points, as well as there are points where you can fund your growth and also invest in technology that you need to develop or develop a new line of production. These are the main reasons, but also there are different reasons for different industries and different startups. So let's here talk about different stages of the startups and how can you think and train your mind that every stage is different, and in order to raise funds, you need to think differently and see your startup in a different perspective. So let's dive in the main stages and how can you approach those stages regarding funding. So firstly, any business, it starts with a problem. The idea usually solves that problem, and think ahead that we need bigger problem that many people face, and or we are looking for old methods, something that is broken, or too slow, or time-consuming, or not too much people are reaching out to some of the services or products. So you think of that, this needs to be worked on. Or you can say that there are concepts of outdated services that need to be updated and delivered in a better way. So at this stage, you are thinking about how can I think about developing my first idea? How can I show people my idea? And then this is the other part. You are thinking of how did I talk to other people about my idea? Will my idea be stolen? Am I thinking it the right way? So now you need to think about finding a co-founder. So finding a co-founder is just like helping you, just like tackling your weaknesses by finding other people who are doing their best at your weaknesses. So just like partnering with them, they will complement your work. They will, so you do your skills, you do your best, and we say that all the times you do your best and delegate the rest. So usually the rest of the work that you are not good at, finding a co-founder that can help you building the product or filling the gaps that you lack. Also, you are talking about dynamic equity sharing. You are giving some of the, let's say, percentage of your company at this stage to your co-founder. So here, negotiating with your co-founder. Then you're thinking about if you find just the idea, you're not writing some notes, you found, maybe you made your mock-up or prototype. So there, you need to find somebody who can help you with next level. So here is the makerspace or the incubator who can just like be into that stage. They can provide you with let's say, increasing your network, giving you lots of training, giving you a wide network of mentors, investors, people who can also teach you things, and they have, let's say, drove their own way before you. They can show you the way, they can give you and navigate with them the best way to get funded and also to be very successful in your idea. Here, this part is taking a big deal. Usually incubators are only a way of giving you the first push to operate. This could be by training, mentoring, and also somehow they give you grants and somehow they can give you investments at a very early stage of your business. So also incubators can also be in your circle of interest when you are searching for funding. So in the incubator, they will push you to do market research, to work on your idea more. So just like if you have built your solution, sometimes one of the problems that might be popped up here is just like you love your idea, you love your product, and you are attached to it. So since you are attached to it, you are not letting it go. So you are just like fetching your idea and the solution and not focusing on the problem that might have different solutions or better solutions. So researching that idea, finding the real insights and the real root causes of that problem, that might lead you to another solution, which might be very profitable for you and also very interesting for investors or potential, let's say, funders to give you money. So there are one of the top reasons that startups fail is that most of the startups they didn't find a market need. So a market need, usually this is a huge percentage, 42% of startups fail because there is no market need. So focus on that. Market research is a very big problem if it's not done right from the beginning. Think ahead that this is the life cycle of the startup. I need to work through every step, and I don't need to jump on from a step to another in order to get funding. This is so important. Think that and double check that. After the market research, now you know why you are building the product, you know your customers. Now you have just like formulate hypothesis. Now you are thinking of this prototype or mock-up or MVP. this can be shown to potential people. They can feel it, they can use it, but it's not ready for sale. So now it's just like a very basic level that can be shown, and people will see and feel what does your business do for your customers. So usually prototypes is a great way to get grants from NGOs, especially in Iraq. There are incubators, accelerators like Takween. They give funding if they can see that the potential is done, and also all of the process that you have done, starting from problem and the initial work through incubators and market research is well developed for your own idea. Also, the prototype can be developed more if you have put your own money. Some of the people, they will believe in themselves, and it will consider as you are putting the money just because you are giving you are believing in your business, and now you are developing the idea so that it's going to be getting fewer sales. So consider that selling the idea or selling itself is a way of is a proof to you that there is a need for the market. So you can also raise funds from your customers. If it's too attractive for them, they will put money ahead. Usually they will do a pre-order. So you can see that one of the most reasons that I can examples that I can show you is the Cybertruck of Tesla. So what they did is they gave a demo in front of, let's say, journalists and very wide PR network, and they have just like placed the truck, and the presenter just like throw a rock on the let's say on the windshield. So it broke, and everybody was texting and talking about that, and it went viral. So what did they do? It's not a dummy thing that is not planned well. It's the contrary. They thought that's well thought of, because they have spread the idea to their customers globally, and then they launched another campaign that said, if you want a Cybertruck, you can pre-order Cybertruck by placing $100 ahead of time. So everybody's starting to put $100 just to confirm their sales. You know, the full sale is not $100. It could be $30,000 or $40,000 or more. But ahead of production, Tesla raised funding from their own customers. So they get millions of dollars before initiating the production line and setting Cybertrucks into on streets. So this is a brilliant idea of how can you raise funds through sales and revenue from your initial customers. So usually here you are developing your sales pitch, you are identifying the value, and also building the sales pipeline. It's in order to test that, is there a market need for that or not? So probably most of the startups fail because they didn't test most of their ideas and their hypotheses in that stage. So they think the idea here is to raise funding, but not to be successful. So we saw many startups raising grants from different donors or different investors, but after all, the goal was raising funds and not be successful. So aware of that trap. So now you are at a different level. Now you feel that everything is in place. I have a proof, I have sales. Now you need more cash. Now you need more, let's say, a different level of knowledge and support so that you can get ahead, maybe to grow, let's say, regionally or internationally. So this is the role of accelerators. They will give you a wide knowledge of business and also give you a huge and quality network. Plus, they will talk about and discuss different things, and mostly financial aspects of the business and how can you approach investors and what are the, let's say, contracts and terms, and also how can you speak the language better when you are dealing with investors. So one of the types of investors at this level you are thinking of are angel investors. So angel investment is a term that is referring to individuals with high net worth. They can invest either by themselves as individuals or through a network. We call it angel network, or we call it angel syndicate. So there is the Iraqi Angel Investment Network, IAIN, which is established in Iraq, and there is also IVP, Iraq Venture Partners. So, and this is growing in Iraq. Now we can see that there are people, we will show you in a short while, there are people who are investing from, let's say, the problem stage to the final stage in order to help as much as possible of entrepreneurs who are working in the country. So angel investors, they usually invest and they take, let's say, 3 to 6 or 3 to 10% of the company that they can they pitch for. So usually they see 100, let's say they see 100 people, so they invest, let's say, in 5. So this is, let's say, as you can see, this is a very low percentage, but that means some of the startups, not that even interesting for those people, or they invest in different industries. So some of the investors, that might be interested in healthcare or health tech or agri-tech, and you have a business in fashion. So they are not a perfect match for your business. So think and research angel investors beforehand so that you can approach the right investor, and also not to waste your time. So there are a different level when you are seeking a very rapid scaling and growth. So here you need to see a different level, a very structured people, professional people, that they are in the business of professional investment. This is what we call it VC investors or venture capitalists. There are a few in Iraq, and there are a lot in the region who can invest, let's say, in the seed funding or above seed funding in Series A, B, and etc. They can give from, let's say, 500K to millions of dollars, depends on their interest. Usually they are different, but they are more professional, and they look at your business in a financial way. They need returns, they need higher returns. So these people, they look for, let's say, a different stage of investment, usually not very early stage, but as you can see, this is the final stage where when you need big money, let's say, high capital to invest, to inject inside the business, and also you need the money to speed up your growth. And they will also take a piece of your company by buying from you in return for millions of dollars. Usually they will do negotiation with you, plus they will see that your company is worth that money. Okay, so now let's take the discussion to another part. So we discussed the cycle of the business itself at every stage. Now we need to think of how can we fund our businesses at every stage. So now we need to look for resources. Where do we look for? So if you are at the idea stage, there are possibly different ways to raise funds, especially now there is a huge risk in investments and also taking grants. It's just an idea. Everybody has multiple ideas. So ideas alone is not worthwhile to invest in. So usually you need to believe in yourself at the very beginning and also to work on your idea. So how can we know that you believe in the idea itself? So usually we have founder savings. So you have, let's say, a couple of money that you put aside. So you can put a few $100 inside this idea to work on it. Maybe you can take some, let's say, loans or support from your family and friends. Plus, you can get, involved in competitions and taking smaller grants up to, let's say, $2,000 to $3,000 to work on that. And it's possible, and now it's possible because there are multiple NGOs working in Iraq that they are supporting this kind of ideas. There are hackathons. There are also in different countries there are loans for getting your idea, just like they call it, let's say, small grants or small loans. Also, at this level, there are incubators. Incubators will give you lots of things, as we discussed. They will give you training as well as the funding resources. And of course, in Iraq, inshallah, it will be a new opportunity and a new space for crowdfunding. This is a space where everybody can, let's say, donate or put a smaller amount of money. So it will accumulate and will be a very big money. So crowdfunding in Iraq, it was illegal to a certain point, and I believe there are people working on that to solve it. Crowdfunding can be a huge potential for investors, and there are platforms that are well known in the country, in the region. One of them is Zumal. So Zumal is one of them, and also there are the most famous Kickstarter and Indiegogo. So they can run ads and marketing campaigns just to fund their ideas. So now after the idea stage, now we are in the startup stage. As you can find, there are different ways also to start up, just to run the operation at a very early beginning. So different options. So in addition to what we have said, there are also certain accelerators and certain angel investors who believe in investing in the human capital, not in the assets that they have, because at this level, assets and business value is very low. So you can see that people can support with minimum amount of money at this stage. So later on, you are in the early stage, you have traction, now you have sales. So now you are thinking of a next level of funding. You need big bucks, you need different skilled labor to hire, you need a bigger office, you need warehouses, and so on. So now you need to think of, consider angel investments and accelerators. So this is the stage where you can put money. But also, you can put your own money if you are rich enough, or you know some of the family members who believe in you and supporting you, who can give you this amount of money. Here you are looking for, let's say, less than $1 million US, so 100K to $1 million US. So in an expansion, now you are thinking seriously to organize the business, to be more optimized, relying on systems, investing more in technology. Now you have different options. So it could be angel investment, it could be VCs, because you are now seeking millions of dollars. You need to just like expand exponentially, and you need to reach as much as possible to reach your customers. This is what happened with Kareem, if you might reflect. So Kareem raised lots of investments just to capture as many cities as they can. I think they reached over 150 cities in a very short period of time. Next level is the maturity. Now you are a company, you are no longer a business. So you're no longer a startup. You're thinking of, we have different options now. We need to grow more. We need to capture our shares. We need to hold on our share in, let's say, in the market share. Now we are thinking of getting loans, big bucks, and also getting private equity plus IPO, initial public offering, that means you are going to stock market, listing the startup of the business on the stock market. You are raising funds from the public, so people can buy stocks from the stock market. This is also a way of getting funds, but this is a very mature level when your business is going to be a very big and established company. So to wrap up what we have discussed, think about that where your startup is now moving. Is it in the idea stage? Is it in the startup? And then search for the potential, let's say, funding opportunities that might be possible for your stage. Okay, here let's move on to talk a little bit about what are the things that we need to have in order to get ready to get investments or grants, or what are the qualifications that we need to show to people and what they expect to see from us. So we call it investment readiness level or investment readiness checklist. This is very important to think about. Am I ready? Is to assess the business, assess yourself. Am I doing the right thing? Am I ready for it or not? So usually at the very basic level, you are working with your business model canvas or lean canvas, and now you are just like putting ahead, filling that canvas and thinking about, am I solving a real problem? Am I providing real customers a real need? Am I fulfilling better and competing? The other level is thinking about the market size. Am I working in a very attractive market, or is my startup working in a very demanding area? Here you need to think about market size. You need to think about searching and assessing your competitive analysis. Think about what are the providers in the market who can provide similar products or similar services, and how does their product look like. This will help you learn a lot about your customers and about your competition. At the level 3, you are thinking about problem solution validation. Now, where do I put what kind of, let's say, you need to tailor now the problem in order to position yourself away of competition, and also so that your solution will be better in fulfilling that need. At level 4, you are now developing the product. You are just like a very low fidelity or what we call minimal viable product that can be seen, that can be shown to possible people. Then you need to validate product market fit. Usually the term product market fit is happening when you see that lots of people are ordering your products and you are getting out of stock. So usually this happens when you see a new shop opening and there is a huge line waiting outside the shop. This is a way of seeing that there are 2 orders. Or you are running a new app. So that app has too many requests or signups. Just like in a week, you are having, let's say, 1,000 or 2,000 requests. So this is a way that indicating that you are reaching, this is the aha moment. You are reaching what your solution is fit to the market. So the investment readiness level number 6 is thinking about the revenue model. So now, does people showing me money and they are ordering, giving me money in return for my products? This is the validation of the revenue model, which is the right bottom side of the model canvas. Okay, so now after that, you need to think about how can you validate the value delivery to your customers. So usually it's the left side of the canvas. You need to think about how can you do partnerships? How can you make the product? How can you reach out to customers and think about what kind of channels that you need to use. At the very final stage, you need to think about identifying and validating metrics that matter. So now you have a business, now you have products in place. You need to think about what kind of things we need to track, what kind of things that we need to put gauges in order to see the performance of the business. Are we making enough sales? Are we not? Sometimes you find shaky indicators in the business, just like your sales might be just like this, up and down. So this is what we need to think about. The investors, they see these gauges and the displays from your business, because these are the indicators that can tell a great story about whether your business is doing great or not. All right. Here, let's talk about one of the most, how can you look and approach the funding process itself. So usually, starting by originating and screening, usually it's investment readiness, assessing yourself before going to the investors. So putting yourself and also check the investment readiness for your business before you go to the investors. Here, this stage is also including reaching out to investors, talking to them, getting appointments to as much people as possible, because maybe you can attend networking events, maybe you can finding emails for potential investors, reaching out to accelerators or incubators. Say, hey, I'm raising funds. Can you give me any leads? Send me some emails of potential people. So here you need to find and have, let's say, your pitch deck ready, and also all of the financial things are ready before what we call investor dating. So you are dating an investor. You need to find the perfect match, and also to research about your potential funder. So after finding the potential funder, we go to a level we call it due diligence, or DD. This is where they agree on, they saw your page, now they think about to audit what you said. Are there proofs from your side that back up your story? So they think about your operational strategy, legal papers, registration. They will take a deep look about your financials, valuation, and etc. So usually the next stage, if they are accepting everything, they need to structure the investment. They need to negotiate with you and the percentage, how much they will take of your company, and also they will take a look at the cap table. So usually the cap table where shows how much people own and how much percentage inside the business, and how much their shares worth. So here is the another stage after you are agreed on the cap table and the stock and what types of stocks in the investment structuring and the approval. You're now finally putting the final papers, and you need to look deeply inside this term sheet. We call it term sheet because everything now is just like we call it the marriage. Putting everything on papers. Now, this is a marriage that can be helpful for you, it can be ruining your business. So some businesses, they were built for investors, because after all, they got a very low shares, or they got no shares at all at the end, because they were raising funds without knowing what kind of term sheets and what kind of conditions they will put inside the contracts. And on the contrary, also, if you are very aware about that, you will negotiate properly. You know what do you need and what kind of things that you can bring to the table. So after everybody is signing up the papers, now it's time for money. So now it's this disbursement of the money. You will take the money now. You will spend it, but just as you have signed up the papers. Finally, it's not the end. This will be a long journey because they will be your partners. So here, monitoring and repayment, you will, based on term sheet, you will pay your investors, and also you will give financial reports, and also you will have board meetings with people. They will also give you what we call value-added services. So that's a term that's related to smart money. So they will not only give you capital, but they will give you experience that they have. They will give you networks. They will give you relations. And also they will have, let's say, a board seat in your board. So think about that. They will also navigate, and they also might take some of the control of your business. So now I'll leave the space for Q&A, So this is it for the fundraising. It's usually covered in a very short period of time. Sometimes it's a tough topic and very challenging for people here in Iraq, for entrepreneurs in Iraq to raise funds. But also there are huge opportunities that is led by NGOs. So this process is also not to forget about. This is also can be applicable to NGOs, but without, let's say, the same, different names, different, let's say, terms. But usually this process will take maybe 3 months, maybe 6 months in order to secure funding. So it's a challenge. It's everywhere a challenging opportunity. As you can see that there are even VC firms in the US or in Europe. They see thousands of pitches, but they invest in a very few. So it's challenging at the both, let's say, side of the equation. So if you are looking for a grant, try in 3 months. So try now, try yesterday. So always say that, because it's a long journey and it takes lots of papers, lots of things to do in order to secure that kind of funding. So now I'll give the space for you to have some questions. So you can write in the chat box your questions. Yes, I saw Salah. Salah raised his hand. Salah, can you type in the chat box, please? Salah, if you can hear me, just write in the chat box your question, if you have a question. All right. So any question from the attendees? Okay, if not, okay, I have a question from Sarah. Okay, so a question from Sarah Kamaluddin. She is saying where exactly we can find investors in Baghdad, how we can reach them. So I advise you to go to networking events that is held by either Capita or Orange Corners or the station in Baghdad. So these are the places that you can find. You can find possible investors. You can reach out to investors, and it's a great way to see like-minded entrepreneurs working on different ideas. So you need to, let's say, do your research, talk to the station, talk to Capita and Orange Corners in Baghdad, and to name a few. There are also different people who are working in the same field that can help you reach out to possible investors. Yes, Salar is talking about how to network and meeting investors to raise funds, where we can reach them. So I give you an example. So if you are in Erbil or Suli, so mostly you need to find places with high net worth individuals. We are talking about, let's say, a very stylish and luxurious hotels, events, and also you need to find and locate businessmen. So you can find businesses that are very known in Erbil or Kurdistan, and you go there and try to talk to, let's say, general manager, talk to their CEOs or their owners. Usually these people are also investing in businesses, or they will lead you to other people that they are possible investors. The same thing in Mosul. Unfortunately, Mosul, because what have happened in the past few years, you cannot find a lot of investors in Mosul. But usually you can find them in Kurdistan or in Baghdad. So we are somehow in Iraq, we are in a connected entrepreneurship ecosystem. So here we need to think about, there are people who are interested in my location, but they are not living in the same city or town. So think ahead, there are people who can invest and they are not even in Iraq. So you need to use different channels. It could be emails, it could be using LinkedIn, or you could be using platforms that can help you with that regard. And also to answer Salar, so most of networking, they are the same from your side. They are entrepreneurs raising funds. So usually investors, they need to be reached out differently. So usually they have very limited time because they are so busy. You need to talk about maybe to take their emails, sending them your pitch deck, the presentation of the business to get interest. This could be one of the tactics. The other tactic could be networking event. You can use LinkedIn. You can use a marketing campaign for your own self, and you can reach out to possible investors. Or what we can find other people who are very wealthy people who can invest in the business. All right. Any more questions? Okay. So finally, thank you all for joining us this evening. And this is a kind reminder that Takween is a project of YANHAD, and it's an initiative to promote civic engagement and entrepreneurship for youth in Iraq, financed by the European Union and the French Ministry of Foreign Affairs, and implemented by Expertise France, and hosted at the American University of Iraq, Suleimani. Thank you all for joining us this evening, and I wish you great luck in raising lots of funds and getting your startups ahead and be so successful. Thank you all, and have a good night.